All right, well, I hope your Friday is starting out well. I'm going to go over Tracy Shuchart's Energy and Materials Weekly. I am a little late on this one, but it's still pertinent to today because not a lot has changed, at least not this week. So the big news, which you've probably heard, especially if you're listening to my getting my emails and listening to me on a regular basis. OPEC Plus came out with a price reduction of 2 million barrels a day. The long and short of it is they weren't making their production curve anyway, but the fact that they're actually admitting to it is sending ripples in the oil and gas world. This is why oil went up. I think it was $14 a barrel in like 2 days or something drastic like that, right? We're gonna go over some highlights. I'm gonna send this via email. If you're not on my email list, just contact me and I'll get you on it, type thing. UAE also stressed concerns about the lack of investment in the industry, which is being echoed by companies in the West. So here's the thing. There has been you ask anybody in the industry, there has been a huge lack of investment for the last 5 years into oil and gas, right? For various reasons, but all this is going to come back and going to bite us in the rear, right? It's like, it's just like if there's been no investment in making cars more fuel efficient, then we're only going to have the big ones that use 15, 17 miles to the gallon, right? We're not going to get the really efficient ones or the brand new cars that will get 27 to 35 miles a gallon or more. We wouldn't have hybrids that get like 40 to 50 miles a gallon, Teslas either, type thing. So that is where the oil and gas industry is at. There's not a lot of investment, and this is going to catch up with us. In a sense, we're trying to spur prosperity to the market for years to come in order to meet growth demand. Here she goes. The reality of the situation is if you want to attract an investment, you need higher oil prices, right? Who wants to invest in something that doesn't give you faith it's going to go up? The industry cannot afford a price crash. Will only make things 10 times worse down the road. In a sense, they are trying to spur prosperity to the market for years to come in order to meet demanding growth because we are wanting more oil. And as our economy goes up, we're going to desire more oil. As we get more technical, as we outsource things to computers, we're going to want more oil. All right, so this is the breakdown. She's breaking down the quotas for certain countries. Kind of like what I said is that they haven't making their quota, but here's a nice chart. She points to some of the bigger ones, suppliers like Russia, Kuwait, Nigeria, Saudi Arabia, UAE. Those are kind of the OPEC plus countries. OPEC. There we go. The one interesting that caught my eye was Mexico. It is right on its development, so Mexico's doing darn well. What else? But percentage wise, they're kind of at what they should be producing, but they're just not there right now. As she notes, Iraq, Kuwait, Saudi Arabia, UAE, and Russia are biggies that are actually producing at or near their quota. The rest are far behind. True, they are shouldering the burden of the cuts, but if we factor in the shortfall, the cut is really closer to 1.25 million barrels per day. All right, so looking forward, we have some potential catalysts coming up that could propel this market higher. In other words, oil and gas is going higher, and this is what I and others have been saying. I'm just going to keep echoing that because part of me just wonders, why aren't people investing more in oil? Like, I get real estate's great, multifamily is great, Bitcoin, crypto. I think crypto has a really big part of the future, but I don't see those assets going up right now. Okay, when the U.S. federal government Reserve, comes out and says, "Hey, we want housing prices to lower," we want employment up higher. Those things aren't good for the housing sector, even apartment complexes and multifamily. They aren't good for the stock market. And Bitcoin just took a poo anyway. But anyhow, I don't understand why people are not jumping on the oil and gas train because, man, it's going to be good these next few years. Ending the SPR drain, which would take 4 to 7 million barrels off the market weekly. So she talks about ending this special drawing rights drain, which what Biden is doing right now to help artificially put oil prices down for his election. Let's take a quick look at that. So here's a chart for the SPR oil releases. Here's, if you want to look them up, here's where it's from, Congressional Research Services. And it just kind of shows how many million barrels that he's putting out during these months, right? So typically in the beginning it was only 20 million through, 20 million through the first little bit of the year. Then they've got about 40 spanning across five months, then 30 across 2, April and May, then 70 across 3. Here's the biggest one. This one kind of matches April and May, which these summer months are typically when oil and gas are really high because everyone's using it, going on vacation, flying, making trips, all that good, the fun stuff you have with your family. He's set to put out 90 or about 100 million barrels through the end of this month, right? Through August, September, and October, right? That's like 30 million barrels a month, or about a little over 1 million barrels a day. I've heard that, I don't know when this was, but I've heard he wants to put more in because of what Saudi Arabia did. They said, or the OPEC Plus did. They basically said, hey, we're going to pull it back type thing, because they want higher oil prices. So what you have is you have these two countries, the two entities that are very large in the oil and gas space. They can control the market and change it, and they are fighting with each other. One is saying, hey, I'm just going to produce less. The other says, hey, I'm going to take more out of my bank account to try and float it. In that arena, who wins? Who's going to win? It's going to be the person that's producing less, because your bank account only has so much oil in it, right? If he drains it all, well, they can just pull back even more if they wanted to. And then now they are in full control of oil prices, because our president does not want us to drill more oil and gas. Again, not wanting to get political, but oil and gas is heavily political, as you can see with the issues with Russia, with OPEC, and the U.S. president. But in the SPR drain, which is going to take a lots of barrels off the market weekly type thing. She says 4 to 7. It could be 5 to 10 type thing. China ending crazy COVID lockdowns, trying to spur on their economy. So China's economy is hurting right now, if you've heard, and they have part of it is this crazy COVID lockdowns where they say, hey, if one person gets sick, you lock everybody in the room and you shut everything down, basically, right? And here's another thing. They are considering lifting product export quotas. What does that mean? So they're saying, hey, companies, you have to make a quota in how much you export. So that's going to make them buy more oil or use more oil in one way or the other, because they've got to export those products. Two possible advantages for taking advantage of this potential move. These are future call options that she's talking about. I'm not really big on futures, but if you are, my point is a lot of futures contracts have actually been behind. In other words, they would say, hey, oil is going to be $70 next month. Turns out oil is $85, right? And so they're kind of been eating crow a little bit on that one. And now I think that what she's saying is they're adjusting it to say, okay, oil is going to go high. So again, she's estimating oil is 100 to 120 by next March or April. For crude oil, for USO, that's the United States oil, might be 90 to 100. I'm expecting oil here, oil to be around $100 a barrel by Christmas, give or take. These are just commodity ones. I'm just going to skip right through it. There's going to be an important China one to go to. Here we go. If China lifts these product export quotas, they will have to start buying more oil. So in other words, the other charts were basically showing China wants to export more. So if they are going to force their people to export more, say, hey, we have a quota, then they're going to have to use more oil to move that product, right? You don't want to just produce it and let it sit in the store. Here's one she talks about, and she talked about before, global gas ship shortage sends vessel rates surging record highs. This is a crazy one right here. Shell book ship equivalent at $400,000 a day to carry U.S. gas. Holy cow, that's $400,000 a day to carry a ship full of gas from the U.S. to wherever you want it type thing. Here's a list of ticker symbols. I'm going to show you some of them that I looked up. Where did it go? Here we go, GLOP. G-L-O-P. I'm just going to call it GLOP. This one is a pretty good one. This is not financial advice, but it looks like a really good swing trading one I'm going to start to follow. So, you know, if you can pick it up somewhere down here, let it fly up, just hold off, let it come down, and pick it up again, let it fly up, hold down, you know. Those are some great swing trades. And again, this has just been going, this is on the 4 hour. So in a period of September 22nd, a half a month, it just flew up. Look at that. Hopefully, I'm hoping it will back down off this. What I may do is I may short it a little bit just quickly. Hopefully it'll come down and start to pick up some right around again in this zone right here. We'll see what happens. We'll see what happens. But I'll let you look at the others. The others are about the same or similar. But this is one of the ones that I'm actually going to start to look on and for my personal trading and such. Russia threats to cut oil imports or oil output to counter U.S. Caps on prices. Long story short, they're trying to cap prices. The G7 countries, so basically U.S. and Western Europe, excuse me. If the price cap is introduced, we can't direct the oil. Okay, and here is what she is saying. If price cap is introduced and we can't redirect the oil to other markets, we'll cut our production as much as we need, Russian Deputy Prime Minister said to Bloomberg. So what are they saying? Okay, you're going to give us some price caps. Okay, so what are we going to do? We're going to stop. We're going to slow down production. What's that going to do? That's going to make oil go up. And it's going they're going to say, hey, we're going to fight back through lack of production, right? Yeah, as you say, it makes even more bureaucrats. And she said, I've been arguing price caps don't work. This is the reasons why. The one thing that I want to really highlight is why price caps don't work is two things. Even the U.S. knows they are enforceable. Yesterday, the U.S. Treasury said we can have a very successful price cap without a single barrel traded under the price tag. In other words, if we say, hey, Russia, you can only sell your oil at $80 a barrel, and they sell it for 90 plus, they're saying we can have a very successful price cap without it, because if what we've been doing is providing leverage for those importers to get the best discount possible, then we're perfectly fine with that. So, I mean, even our government officials, currently elected government officials, I like to add, are saying that price caps don't work, but we're just hoping it gives them leverage for the other buyers. So, in other words, instead of Russia selling their oil at $100 like the market says it should be, they put a price cap of $80, and the person that buys it from Russia buys it at 85 or 90. They're getting a 10 to 15% discount. So in other words, they're saying the price caps aren't exactly working to the cap amount, but Russia's still selling at a discount. Well, yeah, but who cares when what this current president did was double the price of gas, and so Russia is in reality, instead of selling at a $50 or $60 a barrel, they're selling at 90 with a 10% discount. They're still making, 30% more. It's like you can chop the numbers any way you want, but they're still making more money. All these price caps do is threaten global supplies, which in turn raise prices globally. The EU is in the middle of an energy crisis, and this is only going to add more pain. If you have family in the EU, I would see if they can come over and visit for an extended period of time this winter. It's going to be bad, and it's going to be rough. It's going to be rough. She goes into fertilizer. I'll let you read it type thing. Fertilizer is a part of oil and gas, or I should say oil and gas is part of fertilizer. This is an interesting chart, which I'm going to zoom in. This is really, really good. A lot of people are in the mindset of, hey, there's going to be demand destruction, oil go down. Just like we saw when we opened, is that right now the fundamentals for oil going higher, they're all there. They are all there. The fundamentals are there. They're speaking loudly, especially everybody in the industry that knows it. And eventually those fundamentals will win out. They will. However, currently oil is being traded up or down at whatever slightest whim the market, the new news on the market, right? So if someone says, oh, there's going to be some supply destruction, then, expect oil to drop a few dollars type thing. If Saudi comes out and says, hey, even though they have not been making their production goals, and if they come out and say it, hey, we are not going to, they kind of recognize it, then oil flies up. That's just where the winds are trading oil at right now. And so this chart, I love it because it shows, and if you can't see the colors too well, I'll guide you through. But this kind of this orange right here is 2019. This is the observable crude oil and oil products inventory. So this is how much we have. This is on land, floating, and in transit. This is basically the measure of the oil going around the world right now, right? 2019 is kind of hovering around 750,000, probably million barrels, 750,000 barrels, right? Then it picks up over here. So you see when the year ended in 2019, it's going to pick up over here for 2020. 2020, it just flew up. I mean, it went from like 7,500 to crested over 8,000, almost 8,250, right? And it kind of slowly went down as the year did in 2020, and then it pops over here at 2021, and it is just down from about 7,800. It drops down to 7,250, and in 2022, this year, it hasn't really broken 7,250 very much, right? So if people are saying, hey, crude's going to go down, well, this is what it would look like for crude to go down. It would have to be really high. This is in, when oil went negative type thing, which was a fluke accident, and they put some safeties in there to make sure that doesn't happen again. Basically, people over shorting it type thing, and it corrected itself quite quickly, But when the price of crude goes down, the inventory is going to go up because no one's buying it, right? That's why the price flies down. But now we're seeing inventories kind of start to be stretched. They haven't really popped over 7,250, right? So you could say the historical average for the last 4 years is somewhere between around 7,500 to 7,750 per day, barrels per day, floating around the world. Right now we're under 7,200, and that could go down depending on more production cuts. No demand destruction here. Solid report. All right. Let's see here. This is some other stuff that shows the same thing. A basic crude oil stocks, million days of supply, a barrel per day. You can see the averages, and this is where we're at weekly. This is a 5-year range. We should be a little higher. We're on the lower side of it right now. See, here's for gasoline, same thing. We're lower. Distillate, that's everything from like gas to other objects in the fuel. Again, we're on the low side of the 5-year range. So all this is saying is that oil and gas, there's not as much supply out there, right? And we know little supply equals higher price as long as demand is the same, or if demand goes up, it means it's going to go up even higher. So early in the video, I talked about not knowing why people are not investing in oil and gas. I don't understand why. But if you could comment, tell me why that you are or you're not, or like what you're investing in. I'm just curious to see where people are at. I would love a subscribe, would love that. And if you're looking for an opportunity to jump into oil and gas, contact. We've got some great ones going. I'm making 30 or 40% ROI on return for most of mine. So my contact information is below, and I hope you guys have a great day and great weekend.